Welcome to another episode of Clockwork Trades. And today we're going to go over a basic trading concept, which is called the Fibonacci Retracement tool. And I actually have a couple chart examples that I'd like to show you that happened all recently in the market to show you how powerful the Fibonacci Retracement tool is. And I would like to just kind of give you guys a basic understanding of what it is and actually how it works. So we're going to dive right into the video here. Coming into the chart here, I'm on the 4-hour chart. And basically what I'm doing here with these blue lines is I'm separating the weeks, okay? So we're pulling the Fibonacci, we're using the weekly range of the Fibonacci, and we're looking at the levels of discount and premium. So in this case, since we're in an uptrend, we're going to be looking more at the discount levels. But this is basically my Fibonacci tool here. These are the levels that I look at. I look at 0.5, which is equilibrium. I look at 0.618, which is OTE. I look at 0.706 and 0.79. These are the really deep discount levels, anything in the 70% range or close to 80% range here. This is a very deep discount level here. So, yeah. That's basically my Fibonacci settings, and this is a 4-hour chart. So what I'm going to do is I'm going to go into the 1 hour. That way you guys could see with a little bit more detail what's going on here. So this is the first example that I would like to show you here. This example happened not last week, but the week before. This is the week of September 15th to the 22nd here. Okay. The 21st, whatever. So here, as you could see, this week we formed our price range. Okay, so we pull our price range from the previous week high to the previous week low. And so I know that this is not really the previous week high here. This is technically the previous week high here, the high that it created on Friday. However, this is the proper swing high. If I was to pull my Fibonacci here, I would be getting an inaccurate reading. So you got to also use your discretion. You just can't be, oh, it's the previous week high, let me pull it here. No, you need to pull it from the swing high to the swing low, and you got to use your common sense there. So I pulled it from the swing low to the swing high here. And as you could see, what does the market do? The market comes down into equilibrium. We mitigate discount. We go past equilibrium into this discount. We actually, in this case, we end up going past our 0.618 level at 542. We go past that. We actually end up heading deeper into the discount through 0.706 and closer to 0.79. We actually were about 10 points away from hitting that. So that just to show you how close Fibonacci could get you accuracy-wise if you're watching it. And this is just an idea that you could use to get a weekly position, all right? So say, you're expecting price to go up higher, and maybe you're a swing trader. You could position yourself right here. Once you see this week of Monday the 22nd, we opened up higher, and we push lower these other days. We push lower, and we're not really respecting these PD arrays here because these PD arrays are in premium. PD arrays in premium really don't matter, okay? PD arrays that are in discount, that's when you got to start to look. Anything at this 0.5 level and lower, that's when you're really starting to look at things. And the week opened up high, and we pushed down into this discount here. So now, if you were trading on Thursday, you could see, okay, we're in discount, and not only we're in discount, but we also put in an SMT with ES, and we actually flip from that sell program into a buy program, and we start buying, okay? And briefly, I'm going to put this in bar replay mode, and I'm just going to show you like the whole thing, what banks do when they do this type of thing. So really what they're doing is they're going to sell here. Okay, because on this whole leg up, the bank is selling. They're hedging their positions. Okay, so they're both buying and selling. So then they sell there, and you're going to see what I'm talking about. They sell there. We go up a little bit. Okay. We sell again here. Okay. We go up a little bit. Okay. We're going to sell some more here. Right? And then the bank, this is the bank. Okay. The bank hit the swing high. They're going to put their last sell in here. And so watch what's going to happen when we go into OTE. We're going to play the tape, and I want you to watch these candles as they come into OTE. I want you to watch these candles as they come into this zone right here, which I'm going to mark out of this yellow box. Kind of watch these candles. And watch the money. You see why OTE is so important, guys? They sold on this whole leg up. And by the time it hit OTE, they're in profit. Okay? That's why OTE is so important. Everybody, they just think that it's a random level. But this is why it's so important, because these banks, it kind of tells you when the banks have finally balanced out. And so here, let me exit the bar replay. I actually have another example of OTE. This is from 2 weeks ago. This is from a week ago. So we have this big push down, and then we created this leg out of discount. And it's the same thing as last time, right? I could have used the previous week high, but we actually created this swing leg here. So I'm like, okay, common sense wise, I'm going to use the swing instead of the previous week high to anchor my Fibonacci. As you could see, look at the accuracy, guys. I want you to see this. Pay attention. 0.618, which is the OTE level, is at 631.25. Price came down to 633.25. 2 points off of OTE. This is how accurate these things are. Why did it do that? Because it's the same thing I showed you here. The banks were buying contracts on this whole run up. And then once we come down to OTE, all of their short positions from this hedge are in profit. They're ready to close those shorts and then switch the market into a buy program again. So now that's what happened this week. We came into discount on Wednesday. We come into discount on Thursday. We come into discount on Wednesday. This is the thing. If you pay attention to these swings on the higher time frame, then you could position yourself better for a trade, and then you could expect when the trend is going to flip. You kind of see where premium and discount is. So as far as this week goes now, this is the week that we're in right now, we had this push up on Wednesday, delivering from discount up higher. Out of those 1 hour imbalances, we're in an uptrend on the daily time frame. So now, eventually, I'm expecting a swing high to form, and I'd like to see this leg trade into OTE somewhere down here eventually. I'm not sure if that'll actually happen, but we will wait and see. It could keep on pushing higher before it forms that swing high, swing low. But eventually, I do expect this leg to come into OTE properly, into a discount, and then continue to move higher, because we do have a market structure shift pattern here where we form this high inside of a bearish fair value gap. We form a high inside of a SIBI, and then we push through and we form a imbalance. So eventually I'd like to see, the imbalance get traded into. And as you can see, that 4 hour imbalance that is untouched, this huge one right here, is in the discount. So I would like to see we trade into this eventually and then go higher. Today we put in a huge S&P with the S&P 500 at the London high, and that's what started to push us down, sponsor this move down. So we will really see if we get into OTE or not. But everybody, thank you for watching this trade recap. Not really a trade recap, but more of an educational video. I just wanted to share that concept with you. There were some really great examples that presenting itself the past few weeks. So I hope that you guys found this interesting, and I hope that you guys could take away something from this. You guys have a great day and have a blessed day too.